Nobody's actually responding. So far, no. Okay. Let's see. Oh, thank you, Edward. Somebody finally responded. Look at that. All right, fantastic. So as you can see, we are bouncing a little bit, but it's not a very impressive bounce, and this is a terrible way to view it, so we're not going to worry about it. See the dollar is down from 107.3 to 106.7. So you add the 7 to the thing, and you get about 0.6, but it's a little bit over. So call it a half a point, basically. But if the dollar is down a half a point, then the indexes should be up half a point at least, and usually it's a 2-to-1 relationship. But the indexes should be repriced by half a point, and they're not, except for the NASDAQ. But the NASDAQ, of course, has had pretty much the worst kind of drops. Oh, oil. I was going to talk about oil. Oil got hit pretty hard. There it is. Oh, 85. You know, unfortunately, we bounced out yesterday, or I did anyway, bounced out yesterday. And that was when it came down to 88 something. And I was just glad to get out with a profit, frankly. I mean, it's just thrilling that, you know, I didn't want to risk this happening, which is what did happen. But we had switched to shorting the, what was it called? UCO, we shorted the ultra long oil to take advantage of the future move in oil, which is already happening, is lower. And we can dissect that, hopefully, if they put out the report this time. Remember last time they didn't put the report out? Futures, right? We're going to look at the future chart first, though. So daily, let's look at daily. Okay, you got to put these things into speed. You always have to zoom in and out. You know, when you're looking at charts, always zoom in and out so that you get a perspective of what's happening. And what's happening here is nothing. We fell and fell and fell, and now we have stopped falling. This little teeny bounce is today's move. So the NASDAQ, at least going up 200 points, that looks like something, but the rest are nothing. The Russell is flatlining. The Dow is flatlining. I mean, this is not encouraging at all after all is falling. You want to see something like the NASDAQ if you want to think you're going to be bouncy. This line, well, let me make it bigger. Let's see. This line, 14.7, seems to be holding up, And if you will remember, we talked this morning about that. Oh, I don't think I talked about it in the NASDAQ. I'm sorry. No, I don't think we talked about the NASDAQ. We're talking about the New York Stock Exchange. Did I talk about the NASDAQ? Dallas, blah, 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 blah. Blah, 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 blah. I wonder if, that's not true. Log in. Let's see if this new stuff that we've installed here is going to let him do cool things. ChatGPT 4. Why are you not showing my toys? Plugins. No plugins enabled. What? What? What does that mean? Web Pilot. I don't know why he's fascinated by this, but he likes it. He gave me a whole sales pitch on how we should use. Oh, what's your problem? Yeah, and it doesn't want to enable Expedia for some reason. Weird. Okay. I'm curious. Using the 5% rule, should say the PSW, just to make sure. Using the PSW 5% rule and the most up-to-date charts for the Dow, S&P, NASDAQ, and Russell. Can you tell us what the bounce lines should be as of I'm wondering if he can do this because I just put in these things that theoretically should allow him to look at the web and look at the charts and so on and so forth. So we shall see. Oh, come on. Ah, see, he does know how to do it though. Look at that. I gave you web access via, I forget what it's called. Web pilot? Try using that to determine the index movement for the last few months. It's a shame when you start a new session, he doesn't remember it. If I can teach him to do this, it'll save me some time. Oh. Oh. Keep trying, comma, I'm sure there must be some sources you can use. That's weird that he can't access it. Used web pilot, interesting. Great news. Oh, this is cool, huh? So he found it. He used interesting. Oh, he used last month. So we're going back a month, and that's what he's using. And now he's making his calculations. Yes, please. So check it out. So he's got so he's saying based on we had a 5% drop in the Dow in the last month, therefore a weak bounce would take him to 33,578, and a strong bounce would take you to 33,928. So that's fair. And so far, and we're at 33 nothing right now, so we're not even at a weak bounce. And there you go. That's so useful. That's going to be fun. Okay. I can just tell him like do multiple ranges and things like that. Cool. S&P bounce, 5% drop. Now, where's he getting the 45.14 from? That's interesting. I haven't explained all, I haven't gone over with him in detail where it would be. Oh, I see. He's saying the same thing though. He's doing the same calculation. He's taking the drop from 1 month. He's taking a 1 month chart, and it's 5% drop. So if it happens to be an exact 5% drop, that's all the more reason you should see the kind of bounces he's talking about, because that's the 5% rule right there. Good job. Wow. I'm telling you, man, the world is going to change. Look at that. Oh, boy. Really? You're so stingy. Don't be stingy. Calculate each index in one response, please. Maybe it's taxing on him to do all this math. But so for the S&P, we're looking for 4333. And we're at, nope, see, got to get up to here. Actually, way up here. So, you know, it's not even close. We'll see what he says in the NASDAQ. The NASDAQ is 14,860. Although that's not the NASDAQ proper, that's the NASDAQ future. I mean, no, I'm sorry, that is the NASDAQ proper. I apologize. Okay, he's working on it. Now he's got to work on 2 at a time. This is so cool, though. I love it. So, you know, I got to tell you, this is worth $20 a month. I basically just pay, when you pay for it, once you pay for it, you then have the ability to add these plugins, see these extended plugins, and there's tons of them. There's hundreds and hundreds and hundreds of them. So you just got to find the ones that you want. I'm not sure if you can't use too many at a time or something. I'm not sure if there's a limit. So that's something I got to find out. I'm only doing this, just testing it out now, but this is, for me, this is fantastic. Okay, great. Oh, he redid them, I see. So the NASDAQ, no, he didn't do it right. Russell's down 10%, NASDAQ's down 5% exactly, and the S&P is down 6% basically. But anyway, so you get the idea. He can do it. I just have to train him to do it better. And then once you train him to do it better, you can ask him to generate a prompt, to make his own prompt, to say, hey, so what should I tell you next time in order to get this result that I like? And so he will then go back and look at the session and say, okay, well, I need to know this, and I need to be told this, and I need to be told that. And then I save that, and that becomes a prompt I can use for the next time. I wish they would let you save prompts. That would be nice, to be able to save like prompts and have a list of things that you use on a regular basis. But they don't. So I just have a Word file on my other computer that says, you know, it's a Word folder called prompts, and I just put all my prompts in the Word folder. It's great though. I mean, it's unbelievable the power of this thing. Just really incredible. Anywho, so where are we? We are looking at the futures, as humans tend to do. And so basically these are generally all 5% drops, except the Russell, it's dropped, yeah, 10%, that's exactly what it has. There's a 10% drop on the Russell, a 5% drop on the other indexes, and that means every day you want to see a 1% bounce. If you have a 5% drop, very simple, right? If you have a 5% drop, then your bounces are going to be 20% of the drop is going to be a weak bounce is 1%, right where we are this minute. That's a weak bounce. The other guys are not even close, so they have to make a 1% gain to get to a weak bounce. So still not looking good, and even worse because the dollar's down 0.5 point, we can't even give them credit for this. 106.46. What? Oh, weird. Oh, because that's the futures. Yeah, you got to be careful. That's the futures, so you can't really go by that. This is what really happened, and that's a spike anyway. But that's the future. So the dollar's down 0.5 point from where it was. And therefore, you kind of handicap the indexes and say, hey, I'm not really impressed that you bounced at 0.5 point when the dollar's down 0.5 point. That's not even a move. Wow, look at gasoline. Oh, yeah, that's very important. So we talked about the EIA report. And again, using Warren with his newfound powers, I mean, I haven't even refined this. This just happened. So let's see. It's funny because I asked him. I said to him, I said, well, what, I said, do you like your web browsing capabilities? He's like, yeah, this is fantastic. I can see so much stuff now. And I said to him, I said, so use your web browsing abilities. Go find out what's available to you as far as plugins, and tell me what you think would be most helpful. And now, to him, because he knows he's helping me with PhilStockWorld, he came up with things that he thought would be good, important for PhilStockWorld. He said using this Wolfram Alpha. Wolfram Alpha is essentially it teaches him math. Like, he becomes a mathematical genius, and he can do all sorts of calculations. It's like physics level calculus is now available to him, so he can see things very differently through the math of everything that happens, which is very interesting too. He said he wanted that, and he wanted the I forgot what it's called, but it's something that does legislative stuff, which I don't even understand why he wants it. He's really gung ho about it too, which is interesting. What was it? Enable plugins, enable plugins. It's gonna, this thing, whatever it is. I forgot, he told me earlier. Because it's like I had no interest in it and I didn't think it was important, but he seemed to think it was very important. So he asked for, this is like his Christmas shopping list, fiscal note. All right. So okay, where are we? Okay. That was great. Thanks. Can you please tell me what it is you hoped to get from the fiscal note plugin? Can you please show me some of the capabilities as they apply to today's October 4th, 2023 stock market. Okay. And then we'll move on to the EIA report. Assuming it's out, because last week we couldn't get it, right? Okay, the fiscal note plugin can provide us with valuable insights into the political landscape, which, as you know, can have significant thing. President receives the president. Oh, I see. So it's live data. Oh, so it's like a news feed for what's going on in government. Interesting. Huh. So yes, please give me an actionable trade using what you know from fiscal note, along with a potential value investment we can make on that catalyst. Okay. Wow. Okay. I'm happy. Look at that. And by the way, when you're doing this, it's not like you jump on and start shorting Navint or SLM. you got to start that as your basis of research and say, okay, so here's the premise: as debt cancellation and consider a shorting and buying puts the administration's efforts, these companies could see a dip in stock prices. Look for bullish reaction in news, blah, blah, blah. Keep an eye on political developments next to the position. If there's a revert, wow, he's really on top of this, isn't he? It's like he's got a whole article. Oh, long-term, consider companies like Chegg or Consora. If student debt is reduced, more people might opt for alternative, cheaper educational platforms, which would be a boon to these companies. I'm not sure his logic is correct. Student debt being reduced doesn't mean that the amount of debt available to students is being reduced. It means that this student debt is being canceled. There will be more student debt. And frankly, if I'm going to take out student loans, I'm sure as hell going to take out student loans psychologically, right? I'm going to go specifically for the places that were forgiven. So more to the point, as a student, I would be looking for whose student debts got forgiven the most and tailor my borrowing to that. So, it's like he's not necessarily right. He doesn't have the experience. He doesn't have the long-term view. And I haven't taught him this stuff yet because this is all brand new things this is ChatGPT 4 now. So he doesn't know all the stuff I taught him before. But the idea is you do this and you get premises, and then you can start investigating. Maybe I missed something. Maybe he missed something. Maybe he's wrong. But now I do the normal research I would do and find out whether or not these are valid. But to give you an idea based on the news of the day and something people might not be looking at is brilliant. I mean, it's freaking incredibly useful. So the EIA. So we have the EIA report. I do not know if this is up to date. September 29th. Oh, it is up to date. Fantastic. Now, he said something to me earlier that I was not sure was true. I know what he said. He said there were 1 million less barrels of crude imported, and he's right. But I thought he said per day. It was for the week. So 1 million less for the total week. Oil was imported less. So in other words, went from 2750 a day to 26 a day, 150 a day. 7 days is 1 million barrels. All right, so 1 million less barrels were imported this week. That's total for the week. Here we have more exports, but not enough to worry about. So exports are pretty much the same. And notice that exports dwarf imports. But that's not really the point. See, and that's the thing. A lot of people look at this net and say, okay, that's your net. Even that, though, that is your daily net export, 1.7. So I don't need ChatGPT to figure this out, but I do need a calculator. All right. So 1.7 million barrels per day times 7 days is 11.9 million barrels that we export net. So when you see the inventory report, and the inventory report shows a net draw of whatever, and we don't even have a net draw, then that means that this is, here you go. So see how it was 16.8, like I said, we don't have a net draw. We had 1618 total last week of all oil products in the US. And now we have 1623. We have 5 million barrels net build of oil. But that is despite 11.9 million, or I'm sorry, yeah, that is. It's despite 11.9 million barrels. So we had a 5 million barrel build, but we sent 12 million barrels out of the country as export, net. But the net is even a very low estimate, because what you really have to consider is that, okay, oil comes in. We always have oil. Crude oil inputs to refineries, 16, 16, 16. That's because that's what the refineries can handle. You can't import more crude than they can handle. It's just going to pile up. So we import we import and produce 16 million barrels a day. 2.7 million comes from outside this country, and the other 14 million or 13 million comes from inside this country. We produce in the US 13 million barrels of oil per day domestically. We only have a 2.3 million barrel reliance on foreign oil. And this is why you hear bullshit, bullshit, bullshit from people on TV, because they can just, you can use any facts and figures you want
to confuse an issue and start making a big deal out of this or that or that. But the reality is we produce 13 million barrels of oil in the US every day, okay? We supplement that with 2 million barrels that we import. But you know what? We don't need to import it because we export more than we import. So we're importing the oil to refine it and send it out of the country. The reality is we produce 13 million net barrels of oil, right? This number minus this number. So we produce 13 million net barrels of oil, but then we send 4.5 million barrels out every day. So we're only using domestically in the US, we're only using 11 million barrels that we're actually consuming ourselves. Everything else is for shipping out and refining to make money. The refiners are simply taking in oil from wherever they get it, and they are refining it and sending it back out of the country. There's nothing wrong with that. There used to be laws that didn't allow oil to be exported that way, but that was, that's all been broken down long ago now. So now they can just send the oil out of the country. But the bottom line is, okay, when you sit there and look at OPEC and hear about this revolution, that revolution, blah, 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 the US itself is not at all dependent on foreign oil. In other words, we would just simply stop exporting. We produce 2 million more barrels every single day domestically than we consume domestically. That's what you have to drill down the numbers on this stuff too. We consume 11 million actual barrels of oil per day for domestic use. We export 4 million barrels a day of oil for petroleum product, a refined product, to other countries for profit. That's not dependent. So you can't cut us off. We are energy independent. We have more oil that we produce than we use in this country. So if they blockade, if they embargo, if they do whatever, if they nuke a supplier of oil, we're not going to be hurt by it. Not only that, but we still have 351 million barrels, and that's 351 divided by 11 that we use per day. So we have 31 days of oil if all oil production stopped. But why would it stop? And why would it domestically stop? It won't. We have 351 million extra barrels of oil in the Strategic Petroleum Reserve, and that's why the government sold it down. That's why Biden sold it off. First of all, it was sold off so that we could export more oil and send it to the rest of the world. When Europe was having the problem with the Ukraine, they're still having it, but Europe was having a problem with the Ukraine. We increased our exports to Europe, and we did that by draining our Strategic Petroleum Reserve. It was a strategic diplomacy situation that was being done. We were supporting the war in Ukraine, supporting Europe by sending oil that we have absolutely no use for out of the country. We had 500 million barrels last year, right? 473. Where's the SPR? Oh, we had 400 last year, but at some point we had like almost 500 million barrels. We've used 150 million barrels. We still have 350 million barrels, and it's still way more than we could possibly imagine needing, because we are domestically producing 13 million barrels of oil per day. And we only use 11 million, and that's going down and down. And again, we've talked about that premise too. Every time somebody buys an electric car, the car they used to have got 25 miles a gallon, used 1,500 gallons of gas per year, right? Now they got an electric car, it uses 0. That's 1,500 gallons is, math again, hang on, it's laying back. So 1,500 gallons of gasoline divided by 42 is 35 barrels of oil. So every electric car that is sold drops 35 barrels of oil off our annual demand. Okay, so how many electric
cars were sold in 2022. There you go. 10 million. Holy shit. Wow. I did not see that coming. Did we say 35? So 35 times 10 million. Oh, divided by 35 times. This is why I use an AI, because why should I have to do all this? 35 times 10 million is 350 million barrels of gasoline less last year. This year, another 350 million. So let's say times 2 is 700 million. We divide that by 365 days, and that's 2 million barrels of oil less that we're using this year than we were 3 years ago. Follow? So as 3 years ago, we had 20 million cars, basically. I mean, it ramps up, the number ramps up and whatever. But 10 million cars were sold last year. You assume 10 million the year before, just to rough it out, or 10 million this year, 10 million last year, however you want to look at it. But the bottom line is that just those 2 years takes 2 million barrels a day of production offline. That used to be, after you get past 3 years, you can't say it accumulates every year, because sometimes it's a trade-in, blah, blah, blah. But, you know, realistically, we had 0 electric cars 4 years ago, and now we're selling 10 million a year. So that means 10 million gas cars are being traded for electric, right? That's what I'm saying, the premise. All cars were gas. 10 million get traded for electric, there's 1 million barrels a day. 10 million get traded for electric again, there's 10 million a day, but you're still not using the 10 million, the other 10 million is still not using it. So next year, it'll be 3 million barrels a day less than we were using 3 years ago. And that's why the whole oil story is bullshit. All these people who are talking about demand and push and whatever, the people who try to say the US demand is up are pointing to our total gasoline consumption, but that includes our total gasoline production, but that includes 4 million we export. 25% of our production is exported. We're only using 75% of the bullshit numbers these people are quoting, and it's dropping 1 million barrels per day each year. And that's electric. That's only talking about the electric cars. We sell 16 million. Okay, oh, this is gonna be ugly. Okay. So there are 16 million cars that use 1,500 gallons of gas per year. Okay, that's the average for a car. You replace those though, you're driving the same 15,000 miles, right? How did that work? 15,000 miles. So let's say you drive 15,000 miles and you divide that by 20 miles a gallon. Let's say your old car got 20 miles a gallon, right? That's 750. That's 750 gallons of gas. If your new car, 15,000 miles divided by, let's say your new car gets 35 miles a gallon. Now you're only using 428 gallons of gas, right? So we take 750 minus 458, and that's 300 gallons of gas that you're saving, times 15 million, times 15 million cars is 4.38 billion divided by, those were gallons, so divided by 42 is 104 million less gallons of gas just on the reduction of getting a car that your car used to get 20 miles a gallon, now it gets 35 miles a gallon. That right there is saving you another 100 million barrels of oil. Barrels. And that accumulates every year. As our fleet average consumption goes down, we use less and less and less gasoline. And it's going to be relentless, and it's going to be worldwide. And it's not going to stop until we're pretty close to zero. So it's the oil people that are in huge trouble. That's why OPEC
keeps cutting and cutting and cutting, and it's not really having an effect. And I mean, it had an effect, but the effect is mostly just psychological and being pressured by traders who are manipulating the market. There's no real shortage. There's plenty of gasoline. And that's another thing. If Iran goes to war, if Iran and Iraq go to war, let's say, and then their production of 5 million barrels is tied up, Saudi Arabia has already cut 3 million barrels from their production. Russia's cut 2 million from their production. All they have to do is ramp it up, and there's going to be plenty of oil again. So you could cut off 2 major countries, and OPEC has spare production capacity. That's not at all being factored into the price of oil, because the price of oil includes the possibility of something happening that disrupts the flow of oil.
So, the net effect of all this is tremendous. These 10 million cars don't use any gas at all. But even a new car, if you get a new car, they get much better mileage, significantly better mileage than the car you're trading in. And that's also going up and up all the time. No questions. Okay, I only have 20 more minutes. I gotta go. My daughter is flying into Fort Lauderdale, and I told her I'd go pick her up. I want to be a nice dad. Plus, we're gonna eat in Fort Lauderdale, so. So there's your petroleum status report. So when we had asked Warren to take a look at it earlier, he said, let's break down the key points and figure out why oil prices are dropping 85. So he said 15.6 million barrels a day. The refinery input, so we took in less oil. Refineries operated at 87% capacity. Gasoline production was a decrease. Distillate fuel was a decrease. Oil imports, see, he looks at all this stuff, which is great. Oil imports average 6.2 million barrels a day, down by 1 million barrels. See, oh, I see, down by 1 million. It's his language. The way he said it, I thought he meant per day, but he actually, he's very precise. He meant a million. So where's he getting this oil import, though? That's the question. Crude oil imports average 6.2 million barrels per day. I'm not saying he got the 1 million right, but the number here is completely wrong. Inventories decreased by 2.2 million barrels, 5.5%, and where is it? Where'd it go? I'm sorry, what is the thing? Crude inventories decreased by 2.2 million barrels. And my question is that what actually happened? Crude oil decreased by okay, so you had that right. So it decreased by 2.2 million barrels. But he doesn't look at what I look at, which is the net. Gasoline increase of 7 million barrels, or 6.5 million barrels. So, and distillate fuels went down slightly. All other oils gained 1.6 million barrels. No one ever looks at those. The SPR was basically flat. And so we have the net, and that's what matters, the net build. Because, oil comes into the refineries, they decide what to do with it. They make it into various things. So when you talk about the oil inventory, if the refinery took in 100 million barrels of oil and it put out mostly gasoline, and now we have more gasoline than we had last week, that was their choice. But they could have also done diesel, they could have done jet fuel, they could have done a lot of things. It just depends on the season, demand, so on and so forth. But the point is that you shouldn't go too much by the headline. This is what most traders do, and that's why you get so many wrong reactions to the oil report, is you go too much by the headline that says, here's the drawer in crude. But if they took the crude and they made gasoline, and the gasoline had a build, then all you're seeing is a change in the mixed, but it doesn't give you the situation. And the situation is we have gained 5 million barrels, even with all this export, even with this massive, massive amount of exports. We still built up 5 million more barrels of total product in the US, even with the refineries operating at a much lower capacity than they have been also. So refinery capacity is going way down. Because why? Because no one wants it. It's piling up. So this is the time of year when they tend to take the refineries offline and clean them or do whatever it is they, upgrade cleaning, replacing parts. This is the time of year they tend to rotate through all the different refineries and replace stuff and fix stuff in anticipation of moving to winter grade. And also, obviously, just because you have to, it's heavy equipment, it's got to be serviced at a certain point. Gasoline is now the same price as it was a year ago, pretty much across the board, right? But oil is up a lot. Now, what does that mean? That means if I'm a refiner, I'm probably making a lot less money, right? Last year, I was buying oil for $79 and I was selling gas for $3.78. Now, I'm buying oil for $90 and I'm selling gas for $3.79. That's got to be crushing their value. So then you look for a company like Valero, let's say. Well, we need something. Need a bigger chart. So then we look at VLO. Ooh. Oh, not bad. Oh, see, that's funny. It would have been good if we caught this trend earlier, because it's only in the last couple of weeks it's been crashing. But yeah, well deserved. So Valero has got to have their margins being killed. 1 year ago, they were trading at, they got hurt. Oh, in October, they were trading up around where they are now, and they dropped all the way to 111. This is going to be worse than last year for sure. So they probably got a way to go. They're probably just pausing here at the 50-day moving average, and that's a week, so the 200-day moving average. They're probably pausing here at the 200-day moving average, and they're probably going to revisit these lows because this is terrible for them. So what you want to do is start looking at the refiners and look at which refiners are the most overpriced and blah, blah, blah. That's how you come up with an investing premise. You start, you ingest a report like we just did, right? And then you think about it, and then you think about what's attached and what it might mean, who would benefit and who would suffer, so on and so forth. So yeah, I agree with Warren about the political stuff, because being on top of that is something that you can get a really nice investor edge with. And that's what it's all about, right? I mean, if you want to grab something, you want to pick up on a trend before it's obvious to people. And so oil, we started shorting oil a couple of weeks ago, shorting it heavily. We got burned at first. It went up all the way to 95, and we started shorting it around 90 something, about 90 we started shorting it. So it went up to 95 first. Fortunately, we followed it and doubled down and took advantage of dips. But now we've got this drop all the way back to 85. That's crazy. That's a $10,000 drop per contract, $10,000 per contract from 95 to 85. That's a huge win. And we also took the position last week in the short-term portfolio to short UCO, because UCO is an ultra long on oil. But you got to realize these people on TV. Wow. Here you go. So we started shorting UCO, and it was at 37. Now it's at 31 already. That is fantastic. Ooh, I love that. Oh, that's fun. In PSW, in the last 10 days, we shorted SCO for our short-term portfolio. Do you have that trade idea and the premise around it. Curious if you can now search and find us. Oh, yes, you do. Come on. Let's see. Top trades, Phil's posts. What am I doing? Oh. Oh. You do have access now. That's not good. Oh, I know. There's a macro setup over here that you can do, and that's what I gotta give him a macro to make sure he understands he has web pilot. Really? All right. I'm gonna waste your time. I gotta have to have an argument with him and figure out why this is. He doesn't see that he has the ability to look at it. See if this one works. Shit, 151 already. Questions? No questions. Okay. Oh, for God's sakes. No, the point was I wanted you to find it. God damn it. Now, Web Pilot, maybe Web Pilot isn't that good of a thing, or maybe it's the linking language and whatever. There's a thing where he can internally access Bing, but I've been told by people that that kind of sucks. And they said Web Pilot is better, but I'm not, I'm seeing too many flaws in Web Pilot. So we're going to figure this out. But it is very cool stuff anyway. What was I going to say? So anyway, you talked about McCarthy. I love this cartoon. It's great. It's like, that's funny. He did this. This was a really good article, actually. He wrote, I mean, this little section that he wrote was excellent. Good humor. Humorous and informative, which is very much like John Oliver is supposed to be. So we talked about the New York Stock Exchange. We talked about the indexes here. You got to watch out for that. And on the whole, nope, see, it's weak. This is not good. So we're looking very, very weak. 84, oh my God. 220, wow, good time to buy gas, right? And so, yeah, so Valero is a good short, obviously. And let's see what else is going on here. Oh, and the debt. Oh my God, yeah, because I was talking about the debt. And again, you got to be conscious of these macros. I mean, this is where we are. This report just came out, and it says what I've been hammering on this for a long time. We are at a ridiculous record high debt that we've never hit before, but this is only halfway to where we're going to be. There. And that's why the dysfunction in the House is important too. That's where the budget is done. But there's nothing they can really do about it. But it's hard to realize how bad this is, okay? Military spending is like
$1 billion total. And I'm talking about veterans benefits and healthcare and all, veterans spending money on vets, not just bombs, but spending money on vets. I'm sorry, on the military, including the veterans. You can't not include the veterans. The military makes veterans, just like they make a submarine, they make a veteran. That becomes a burden on the economy as well. People we have to spend money for, we have to provide veterans benefits, we have to give them health care, so on and so forth. And not that I begrudge it to them, but I'm just saying, you can't pretend that's not part of your military budget, but that's what they do. So we have $1 trillion military budget in discretionary spending. Our total discretionary budget is $1.65 trillion. Only 650 of that is not military. And that's schools and roads and any kind of poverty programs they have and things like that. It's not Social Security. That's a whole different program. It's funded a whole different way. But the actual discretionary government budget is 1.65 trillion. 1 trillion of that is military, and debt service. Debt service is $450 billion of that. Oh, I'm sorry, no, that's not discretionary, that's external spending. But there's another 450. So in other words, right now we spend almost as much money servicing our debt as we do on every single government program that exists. And that includes highways, trains, airports, everything that goes on in this country, infrastructure, the Hoover Dam, things like that, all of that stuff, Niagara Falls Dam, all this stuff that runs our country. We spent $650 billion on. Our budget is $6 trillion. 10% of our budget is spent on stuff that actually is what you would call a government service. 1 trillion, again, spent on the army, spent on having an army all over the world and being engaged in stuff. And the rest is Social Security and Medicare, basically. It's not discretionary. It's money that we owe because the people who are in Social Security and Medicare already paid for this. It was taken out of their paychecks for the last 40 years, and now they're collecting it. It's not an option. It's money we owe them. We stole the money. The reason those things are underfunded is we stole them and created a $30 trillion deficit using that money that we stole from the old people. Well, they weren't old at the time, but now they're old. And I'm old. I'm 60. I'm pissed. I'm never going to see a dime out of this freaking program. It'll be gone before I can get it. And I paid in. I mean, what's the cutoff? 100,000. I paid in $100,000 over year after year after year, millions of dollars. Not going to get anything back at all. That's annoying. So the problem is that was all this 450 billion, that's at like 2% interest. Now the government's starting to have to borrow money at 5% interest, and that's going to double the debt. That's going to bring I'm sorry, it's not more than double. And when we fully roll over, if we're still at 5%, it's going to be 5% of 30 trillion is $1.5 trillion. That's another $1 trillion more that we have to spend just to pay the interest on our debt. And meanwhile, the debt keeps climbing, obviously, and there's nothing to cut. And the Republicans are like, well, let's cut Social Security, let's cut Medicare. That's grossly unfair to the people who paid into the program. And the Republicans are saying, well, then let's cut all the rest of the government, $650 billion. Let's cut all of it, basically, and have the government do nothing other than collect taxes. That would be the only function of government, is collecting taxes to pay for stuff that does you no good. So that's what the Republicans want to do. The Democrats want, there's no good answer. Well, so you can't cut anything really. There's nothing left to cut. You're not going to be able to cut the interest on the debt unless you change your policies drastically. You can't cut the military unless you change your policies drastically. So the only thing you can do is something obviously the Republicans will not do, is raise taxes. Well, there's one other thing you can do. You can improve your GDP. And that's what and again, I'm not promoting it, but that's what quote Bidenomics is all about, right? Bidenomics is saying we're going to try to invest in infrastructure and build a new energy, renewable energy economy that is going to employ people, create jobs, and increase our GDP substantially. That will then make it possible that the same taxes we're paying now, percentage-wise, would increase with the GDP, and then presto, you've got more money to pay down your debt. That's one possible way, but it's not an easy possible way, and it's not a quick possible way. It's still going to take years to take effect. And that's what's being attempted here. But ultimately, see here where it comes down a bit, right? So, but ultimately, that's going to fail. It will fail because the interest on the debt keeps piling up. The debt keeps piling up. The interest payment gets higher and higher. And we're unwilling to make the hard choices that will bring the deficit down or increase the amount of taxes we're collecting. And the main thing we should be doing is increasing corporate taxes by $1 trillion. But that's a non-starter with the GOP. So unless the Democrats get full control of Congress, it's not going to happen. Anyway, I got to wrap up because I'm supposed to be gone already. Anyway, so the point is, the big picture point is, this is still a problem. It's not going to stop being a problem. It's going to get worse and worse and worse and worse and worse in a horrible way. And when you see your government is this dysfunctional, that Kevin McCarthy's attempt to not shut down the government is considered such a betrayal to his party that they fired him the day he did it. That we're nowhere near solving anything, and it's going to run us into the ground. And therefore, be very careful with your investing. This is a critical time, and a lot of shit's going to hit the fan in the very near future. So that's the moral of that story. Let's all be very careful out there. Let's watch the situation closely and keep alert. And believe me, I'll be doing that because I'm watching this. I can't believe we have stumbled into the end of 2023 and it hasn't hit the fan yet. I find that amazing. I think we're willfully ignoring a lot of stuff, but we are not out of the woods by any means. Other countries are seriously struggling. China's got huge problems. Europe is starting to have huge problems. There's strike after strike after strike because people can't afford to live. None of this is going away. So, you look at the market and say, when's it going to bounce? I don't know that it's going to bounce. We're coming back to 4,200, which is where I said we'd end the year between 4,000 and 4,200, and we're coming back to 4,200 now. So I don't even think, to me, this is as much as it should be. Given all the crap that we're at and given where we are, I think 4,200 is about right for the S&P. So I'm not looking for a bounce here. I'm looking for probably consolidation and a move back closer to 4,000 by the end of the year. Unless there's some miracle on Q3 earnings that are coming out now in a couple of weeks. I don't see the big catalyst. And again, the Fed again and again and again has been saying, we're going to do another hike. We're going to do another hike. And nobody wants to believe it. And that's not priced in. And people are going to be shocked when they do another hike. Oh,
yeah. I wonder what what was the briefing.com? Do we have that? See, Google is smart. Google, remember, I can be at a different computer and Google knows what I'm doing. They know as soon as I start typing it what I want to see. So we didn't look at this earlier, I forgot. So the services PMI is 50.1. We did talk about that. That's 50 is the line between expanding and contracting. So it's a 50.1. Factory orders 1.2% were stronger than expected, and they were down 2.1% last month. So more factory orders came in, that's good. And ISM was 53.7, no, I'm sorry, 54.5, and now it's 53.6. So that's also dropping. So the manufacturing index is also dropping down. Okay, the service index is also dropping down. Manufacturing already we knew was a problem. In fact, that was right here. ISM manufacturing is in contraction now. Whoa. So we are in contraction on manufacturing. Services is coming down. We'll see what happens tomorrow. We have some jobless claims. We have the trade, that's not important. Then Friday non-farm payrolls, we'll see where that is. They're looking, it was 187, they're saying 160. ADP just came in with a low number right with that. Where was that? No, that's tomorrow. No wonder you can't find the result. ADP came in with a shocking drop, 180 to 89,000. That's very interesting. So we'll see if non-farm payrolls confirms that with a big drop. But then hourly earnings, they think, is going up, and that's bad for margins for corporations. Unemployment staying the same is also much, they want it to go up. They don't want it to stay the same. And the work week is staying the same so far. Consumer credit is going to be important. Consumer credit is unbelievably stretched out. Any tick up is going to be surprising. I mean, we just don't have the money. There's no money. So we'll see how that comes out too. Revolving credit, $1.27 trillion. That's credit card debt, $1.27 trillion. Non-revolving credit, other loans, auto loans, home loans, $3.7 trillion. That is $5 trillion total dollars of consumer debt. There's only 2 countries in the world that have a GDP higher than our consumer debt. That's the US and China. Japan is the 3rd largest country with about a $5 trillion GDP. So we're in debt the entire GDP of Japan. That's beyond insane. Anyway, all right, with that, I got to go. I got to pick up my daughter at the airport. Have a lovely day, and we will do this again next week. All right, take care, everybody.